Crypto trading for beginners. This particular episode is what you need. I'm going to be teaching you the one crypto trading strategy that works each and every single day. Watch the whole entire episode, especially if you do not want to get caught up and just basically be clueless. So what we're going to be talking about is going to help you identify market trends. You are going to be able to understand when to long, and when to short. This is very crucial because most of the times, a lot of beginner traders are always doing the opposite of what the markets are doing. When the markets are pumping, a lot of crypto beginner traders are shorting. When the markets are dumping, a lot of you are caught up in longs. If you watch the entire episode, you will no longer make that mistake. One thing that you have to identify and be very good at is understanding Heikin-Ashi candles and the time frames to trade them and how to manipulate those particular time frames. It's very simple, very basic. If you guys are ready, smash the like button, drop me a comment in the comment section below and let me know what your biggest challenge is, especially as a beginner crypto trader. By the way, I have some special bonuses for you. I'm giving away $500 in sign up bonuses to the people who are going to be signing up using the link in the description. I also happen to be giving out $1,000 to the people who are going to be signing up using my link in the description to MEXC. So basically use Binance and MEXC as well, because there are some tokens that are very powerful on MEXC that are not necessarily available on Binance. So whatever you do, even if you already have an existing account, sign up using some other login credentials and just basically be able to do the verification process and easily get that $1,500 for free. Without further ado, let's jump into this. Okay, so one thing that you have to understand is in order for you to get the trade right, you have to be able to identify the markets. And generally, markets are made up of three cycles. An uptrend, which is prices going higher and higher. So basically, higher highs, okay, and higher lows, okay, higher lows and higher highs. When the markets are consistently producing higher highs and higher lows, this is generally known as an uptrend. And when the markets are trending in a downward spiral, right, and they are producing lower lows and lower highs, this is generally referred to as a downtrend. The third market structure that you have to be able to identify is a consolidation phase, which is typically a range where the price is bound by certain attributes and characteristics, and basically the price is going back and forth in a specific target range. Okay, so it goes to the upside, it goes to the downside, and just basically maintains that particular market structure. So if you guys are able to look at a chart and be able to identify the phase of a market cycle you are in, you are not going to get caught up and aware of the markets, and you're always going to be trading in the right direction. So if you want to be a profitable trader, be very good at identifying the beginning of market trends and market exhaustions. When the market is exhausting, it always leaves clues. When a new trend is about to happen, it always leaves clues as well. So we're not really going to talk about advanced methods because I just want to keep it basic. So for now, in order for you to identify what type of market structure you're dealing with, you have to understand that there are different time frames. If you are familiar with the website that I'm using, this is tradingview.com. Link is in the description. If you are a serious trader, or if you want to become a serious 9-figure trader or 6-figure trader, you have to sign up to TradingView. So the link is going to be in the description. What I usually like doing is, especially when it comes to scalping is a trading methodology that involves you consistently getting in and out at very short intervals. Let's say, for example, 3-day time frame to about 6 days to about a week. So you are generally flipping bullish and bearish within a short period of time. And in order for you to execute that, right, you have to be able to identify market trends. Okay. And for example, one thing that you have to be familiar with is identifying how to manipulate different time frames. Different time frames are going to give you different ideologies and clues about a market structure. And this is one of the reasons why, first of all, you have to identify what type of trader you are. If you really want to be able to earn, let's say, for example, anything between 70 to about 200% profit in a month, you can only be a scalp trader who's mostly infatuated with the 3-day time frame to about the 7-day time frame. The 7-day time frame, which is 1 week, is going to be your highest time frame. So one thing that you have to be able to identify is, number one, what is your highest time frame of operation? So what I usually like encouraging scalpers or beginner scalpers is the 3-day time frame should be your highest time frame. Okay, if you have this as your lead indicator with regards to the market structure. By the way, in case you guys are confused, the reason why I'm using 3-day time frame is because I want to be able to identify when I should be able to long and short. And by the way, I forgot about Heikin-Ashi candles. So basically, Heikin-Ashi candles are these types of candles. So when you click on the candle bar, right, on tradingview.com, just simply click on the candle sign right over here. So there are different types of candles. There are Renko candles. There are, for example, if we use Renko candles, this is what we're going to have. Then there are also regular candles, which are just basically candles. Okay, so these are going to be popping up like that. So what I like is the Heikin-Ashi. So the Heikin-Ashi is a very good visual representation of what the market is doing, and it allows us to have less analysis paralysis. So the first thing that you're supposed to do as a cryptocurrency trader who happens to be a newbie, you have to switch from the regular candles to the Heikin-Ashi. Once you do that, right, you have to be able to identify that Heikin-Ashi candles are modeled in a very specific way. So it's very visually easy for you to see what is happening to the market structure. For example, from the 19th of October, right over here, the 22nd of October, basically the 19th of October, all the way up to around the 31st of October, this was an uptrend because we were consistently having bullish bars. So Heikin-Ashi candles are going to tell you what type of market you are trading and what you're supposed to be doing. So what I usually like doing is I like trading within the trend. Okay, so for example, if the 3-day time frame is bullish, I'm going to be bullish. If the 3-day time frame is bearish, I'm going to be bearish. So if you take a look at this coin, right, Virtuals, looking at the Heikin-Ashi candles, you can clearly see that this is obviously a bearish trend. And although, you know, the bars that were previously here, right, were bullish, the market has corrected. So what I usually like doing is I look at the two candles, the two immediate previous candles, the current candle and the existing candle. So for example, if I'm trading within this bar, right, I look at bar number 1 and bar number 2. If I see that, okay, overall the market structure is tilting towards the upside, I'm going to be I'm going to be longing. So for example, in this case, right, because we are in the present, if we look at the previous two candles, 1 and 2, right, these are obviously in a bearish trend. So we're obviously bearish right now, and I would be shorting the markets. Let's say, for example, we had market situations where we had a range. Remember, we talked about a ranging market, a trending market, and a bearish, a bullish market and a bearish market. So instances where the price is sort of at this particular phase, it's a range. So you have to initiate your ranging strategy. And you guys already know, during an uptrend, all you got to do is buy the lows, sell the highs. That's it. During a market range, you have to sort of play the deviations. When it goes to the bottom of the range, you long. When it goes to the top of the range, you short, and so on and so forth. So now that you guys already have an idea on how to manipulate the time frame and which time frame is supposed to be your guide, so just to summarize it, if you want to figure out what the trend is, look at the previous two Heikin-Ashi candles and figure out what is happening. So sometimes it could be very, very confusing because at times the Heikin-Ashi candles could be in a range. So what you have to do in that particular case, right, you have to look at the loss in momentum of a particular prevailing trend. Like for example here, if I just zoom out, we had a very prolonged bearish market. Then obviously the markets slowed down. We started producing doji candles. I hope you guys already know what doji candles are. Doji candles just basically confirms indecision. So if you have moments where you are having like a blatant downtrend and then you've got indecision, it means the markets are about to switch because, you know, people are no longer in agreement with the continuation of a downtrend, and therefore we're starting to see buyers come through. You know, we saw buyers buy this particular dip right over here, and the market reversed. Okay, so use the 3-day time frame as your anchor time frame. So this is going to guide what you're supposed to be doing, and once you do that, right, you have to look at another important time frame, which in this particular case is going to be this particular time frame, which is the 4-hour time frame. If you look at the 4-hour time frame, this is going to be your midterm your midterm time frame, and it's going to be your counter trend. Okay, it's going to be your counter trend, and this is what you are going to wait for the markets to do in order for them to have a breather. Okay, so this is going to be your counter trend. You are basically going to wait for the counter trend to kick in. What do I mean by this? Okay, but before we go to that particular point, let's also look at our execution time frame. So the 24 minutes is going to be our lowest time frame. Okay, time frame, and this is going to be our execution time frame. Okay, this is going to allow us to enter and exit. Okay, so this is going to be our guide time frame. This is going to overall give us a bias time frame. Okay, so for example, if we are in a clear downtrend, right, you're supposed to obviously short the markets. And in order for you to short the markets, right, you have to wait for things to align. So if the 3-day time frame is bearish, you are basically looking for opportunities to short the markets. So you wait for the 4 hours to be your counter trend. You wait for the 4 hours to have a pullback. Okay, so imagine the price is doing like this, right? So in order for you to get in, the smartest thing to do is for you to short these highs, right? Okay, whenever you have a pullback, you get in and you short the markets. So when that happens, this is going to be your 4-hour time frame. So you have to oscillate and sort of switch between time frames. 3-day time frame is bearish. Wait for the 4 hours, which is your counter trend, to start having a reversal or a pullback and executing the 24 minutes. So you have to wait for the 24 minutes to now start showing signs of exhaustion. So let's do it together. Okay, so with this said, when it comes to longing, right, it's going to be the inverse of this. Let's say, for example, we are actively trading the 3-day time frame is bearish. We get it. We switch in order for us to view the counter trend. Let's look at the 4 hours. When did we have moments when we could have entered a short? This was when the markets were counter trending. That was an opportunity there. This was another opportunity, and that was also another opportunity. Okay, so whenever you have an aggressive move to the downside, wait for the counter trend to exhaust. At this particular level, this is where you want to get in. This is basically your entry most preferred level, these types of levels. Okay, wait for the pullback to happen, which is going to be on your 4-hour time frame, and then if you see that the 4 hours is beginning to have a counter trend, wait for the exhaustion of this particular move. When this move is going to lose momentum. So remember what we spoke about, right? How do you know that a move is losing momentum? You simply go and look at what is happening. So for example, okay, if the move happened like this, okay, the previous demarcations that we had, when a trending market is very strong, right, we consistently have market structure which is intact. If it's a bullish market, there's going to be higher highs and higher lows, which was true in this particular case. It was producing higher highs and higher lows. And then take a look at what happened here. Boom, that was your first sign. We have a break in structure where we produce a lower low. This particular low right over here, I don't know whether you guys are able to see this. If you go to the smaller time frame, like 5 minutes, you're going to be able to see that this particular low right over here is lower than this low. So the market structure was broken. And again, right over here, the market structure ended up breaking. So you could have ended up shorting this level or that level. Either ways, you would have gained some money right over there. Even though the market did end up reversing, right, and pushing towards the upside, you would have still gotten your money because you also had this opportunity. You were scalping. And then the market structure ended up exhausting, and it sort of created a different market structure. You would have gotten out of the trade, or your stop loss would have been triggered, and take a look at what happened. And then you had another scalping opportunity. So these particular market fluctuations, they're giving you about 15%, 20%, 5%. So when you compound these different market structure levels, it really piles up. And this is one of the reasons why, if you understand this methodology, you guys are going to be masters of entries and exits, and you're going to be able to figure out when to enter a trade. So without overcomplicating stuff, you guys have to subscribe to my YouTube channel and look forward to the next episode, because I'm going to be diving deep. If you guys enjoyed my explanation, please let me know in the comment section below, what aspect do you not understand about market identification and also manipulating the time frame to figure out your execution levels. At what point are you going to be able to execute? Because if you identify a market trend, the next logical thing that you're going to do is be able to execute. So with this blueprint, you guys are far better than a lot of other people out there. It's been your boy Muna, aka Beyond 10X. Subscribe and see you in the next episode.